All right, welcome to today's section on market review. Before we get down to the nitty gritty of today, I want to take a time out to wish you a compliment of the season. So let's get down to our work for today. As usual, we'll be reviewing what went down on Euro USD or Pound USD, and we'll consider first the dollar index. Why should we go to the dollar index first? Because the dollar index is one of the currencies that make up the pair in in this case now Euro USD, and dollar index holds more strength as to where the direction the pair, the Euro USD pair, will eventually be drawn to. Another way to trade it is, should you ignore the dollar index, then you should take your trades, your analysis from the futures contracts of the euro. For example, you are trading euro USD, then you should be talking about the CE1 exclamation mark as a futures contract for euro. So here now let's get down to, we'll be using dollar index to draw our analysis before we take our entry on Euro USD. So let's take our dollar index here, and this very section would be analyzing, reviewing what I did on a trade I took on CPI, which on Thursday 18 December 2025 CPI news release, how I traded it. So let's go to that day. I'll walk you through how I ran my analysis before taking a trade that day. This could one way or the other help you to trade high impact news. So let's delineate the day, which is December Thursday 18 December 2025, our CPI day. Mind you, CPI release came at 8:30 a.m. New York. Okay, so let's dive in. So go to either the hourly or the 15 minutes, any one of your choice. So let's locate this day. Okay, this is the day. So let's delineate our CPI. But before we delineate our CPI, let's zoom in into the structure and see what catches our eye the more. So when you look at this very chart on this 15 minutes time frame, you will see a few things that will catch your eye prior to CPI. So let's delineate CPI, which is 8:30. Yeah, this 8:30. Change the color. 8:30. So looking at it, you see that you have, prior to CPI, you have a daily range, which is this high to this low, and market was here prior to what CPI, which means I will look to this very high where the market dropped from. You can see relative equal high with it. So you delineate that as your buy side. Now you don't know what CPI will do yet now, so you delineate it. Buy side liquidity, so we just leave it at buy side. Then when you look down, you see a sell side here, relatively low. Got price was here. This is the low that extended up to that high. So you delineate it. Let's say sell side, put it as red. Now we scroll down a little bit lower. We see that this very run that formed this relative equal high, it moved from an inefficiency here, which is internal rigidity, is bullish fair value gap. That's where the price rose from after clearing the latest size, tap into this bullish fair value gap and round up. So it will be okay if we delineate that bullish fair value gap. So you have done this now, and now CPI came here. CPI news was released here, and market ran down, ran the sell side you marked down and dropped into that fair value gap and got rejected. Now the question is, what should you do now? So what I did was I came in here, I watched this very leg that got rejected after clearing sell side, means you had cleared liquidity from the market and got rejected. So I want to see a change of state of delivery to the upside. Then I cannot begin to target this relative equal high here, or this very buy side that is ahead of price. See now, so you delineate here, minor, okay, call it minor buy side. While we're delineating here, this was a high that was formed prior to the drop. This was the electrical high that was formed prior to the drop of this dropped here during the CPI release, and after the drop you can see market rejected back in. So I will go to study this price where the market got rejected and see if I could take an entry to target at least this minor buy side here. So I step down to a lower time frame. Let's say I use 5 minutes now. Step down to my lower time frame. I went back to that place. So this is the place here. This is the leg here. This is now 8:45, which is New York time for my entry, in New York key zone for my entry and forest. So now let's watch here. So you see market at the release here, this is a new release. At the market dropped down, clear sell side, hit the bullish fair value gap on mark of the 15 minutes where price rose to that major buy side liquidity there, and market pushed up. If you see here, you see market forming a swing high, because there's a low to the left and a low to the right. So this makes this very bearish candle at the center is swing high, and you can see market now dropped and had a change set of delivery to the upside, tearing past the swing high here, forming a bullish suspension block here. So let's mark the bullish suspension block here. This is the bullish suspension block by ICT. So as market dropped into it here, this is your first entry. Remember, this is also an order block as well because of this change date of delivery, because of this bullish run that fully engulfed this last bearish run that later led to this swing high here. So as market dropped into it, this is your first entry you hold. As it came back into it, this is your second entry. Should you missed it at first, it give you another ample time, another opportunity to enter again. So as you take this buy here, you hold at least until you take out this. If you are that scared, if you enter here, for example, you enter the second entry, you enter here, you can get out here, still scale out some position at this high, then you hold the rest for this. So that's how I took the trade, and you can see all the buy side here were what were crushed. Now you cannot ask, you cannot argue, but this is dollar index. How will I be able to use it to trade? How will I be able to use to trade the currency itself, like the euro, USD itself? So since you have this formation here, at this very same time, you see what is happening. After the formation of this change state of delivery here to the upside, you go straight to your dollar index and see what is happening at that same time on your dollar, I mean your euro USD, and see what is happening at that same time. So you come in here now. What do? We go straight to the day, which will the CPI day, which is 18th, Thursday, 18th December 2025. Okay, it's deleted. This is Thursday. So what you do, you step down to your 15 minutes is what you use there. So we step down to that 15 minutes. Go to, so where is our CPI? CPI was 230. We delineate it with 830. I mean, delineate it with yellow vertical ray. Okay, so what we do, we mark out prior to the CPI. We mark out, since we mark out the sell side and the buy side, just like what we did on what on dollar index. So prior to the release, we have this sell side here. We form relative equal low. So we'll put it, delete your sell side liquidity. And okay, come on, this relative color. Then what we have relative equal high here. I will mark it, we delineate it with blue as our buy side. Change it to blue. This is buy side liquidity. Okay, so now CPI happened here, 8:30 a.m. New York, and around the buy side. Now let's check this very leg around the buy side to see where we could have entered. Remember, on the SY, we already have a change state of delivery to the upside. Definitely is now bullish. And here we'll be expecting a bearish run because the foreign currency goes opposite the direction of the dollar index. So I will come to 5 minutes. Let's use 5 minutes here. And let's remove this. You can see the market here. Run at the buy side here and dropped, forming a bearish order block here too as well. So you can also go lower to like 3 minutes if it's not too clear for you to see. But you must have at the back of your mind that dollar index has already given you a series of delivery to the downside. It has given you that already, right? So your owner is to look for a place of suitable entry on the what? On the currencies. So when you come in here, you see the market taking our buy side, which is opposite of the dollar index, and drag it down, forming a swing low, and try to push up. So we have a high, a low, a higher low. It was unable, this is a failure swing, was unable to push up again. So now this was the stage where we had a change state of delivery to the upside in the dollar index. And on the currency here now, we are having a failure swing. So now we can now use an optimal trade entry to take our trade here, which means we now have a daily range in this 1 minute time from here. This is where the move started. It came here and got this retracement. So we now grade from this high to this low and see if we can have a premium market from this very high here to sell the market, because all we want to do is to sell, not to buy. Why are we selling? We already analyze dollar index as a buy. It's definitely our foreign currency against the index should go for a sell. So we use our rectangle that is calibrated already to grade this very daily range into premium and discount. I will sell for what? We sell from premium, not from discount. So market now came, formed this daily range here and dropped. You can see it dropped into this it dropped into, I mean, it rallied into the sell side, which is the premium, run into the premium side of this daily range here. We can now take our shot from this very position. This way we take our shot and we hold from here. We hold until we get to the sell side here. You can run, and should you miss the entry, just as the dollar index gave you another entry, second entry, should you miss this, you still have another opportunity to enter again, but your daily range will be different this time. The daily range will be from this very low to this very high, and you wait until market to drive into the premium side, of which it did here after clearing this minor buy side, and you short from here again. If you are that scared for here, you can take scale out of position at this low and hold the rest for at this very junction. So from there now you can see that our sell side that we marked came and market kissed it here, and this is where we go out of the market for the day. So this was how I traded CPI news release. I wasn't in the market until the release, but the moment after the release I marked the footprint, where what I mean the footprint that price left in the market. And from there I did my analysis right from the dollar index, and I transferred that information to the foreign currency, the pair that I traded, which was Euro USD in this case, and the rest was just a beauty to watch. The rest was just a beauty to watch. So it's a beautiful. It was a beautiful attempt, and it was a beautiful conclusion as well. And thank God for mercy, for favor, for His grace. I will pay homage to ICT as well for the selfless service he did, because he could keep all this to himself and never release it out to the public. But he used to release it, and I, be a student, he be my mentor. I'm very, very grateful for his selflessness. All right. If there be any question, feel free to put it across to me and I'll do justice to it. It's just a market review. It's not signal. It's not. Um, yes, I would say hindsight. Yeah, hindsight, but it's helpful. How is it helpful? There might be some corrections you would need to make. Maybe you took a trade that fell short of your expectations, and listening, but pay attention to all of these. You might have one or two corrections, and that might go a long way to put the missing pieces together, and you can from there become victorious. Who knows? So always, I want to say subscribe, click that subscription button so that when I drop a market review next time, you have a first hand opportunity to see it. You don't need to go through all different handles first. You could just get alerted and you see, I believe you make some progress from it. Peace out.